Ladies and gentlemen, my name is Greg Michalwoski, and this is a Forex video report for equities.com. I'm going to focus here on the major currency pairs that are stuck in a range this week. If you like this video and want to see more of my videos, please go to my YouTube page at GregMikeFX and click on subscribe for more information about trading Forex on a daily basis. I maintain a blog at GregMikeFX.com. Please visit me there. All right, let's take a look at some of our currency pairs. We'll start off with the sterling versus US dollar. And if you look at this chart here over the last 1, 2, 3, 4, 5, 6 trading days, the market's been in a narrow trading range. We have a double bottom here at 165.34. We have a number of different highs in this yellow range up here, which comes in at the 165.95 to 99. Let's call it 166 level on the top side. Now, over the last couple days, the market tried to move above that level and failed, tried to move above it today, not once, but twice, but 3 times. And each of the time, we get these little breaks to the upside above the 166 level. What do? We have these failures. No closes above the 166 level. That's significant. That says to me that the buyers had an opportunity to take the price up higher here, and they couldn't do it. They couldn't keep the momentum going. Subsequently, the market fell down to what is our next support level against the 100-hour moving average. That's the blue line in this chart. It's a 100 simple moving average. And lo and behold, we've been finding support against this level. And we haven't had a close, maybe we had one right here, but we haven't had a close, necessarily a strong close below that 100-hour moving average in the last day and a half for the sterling versus US dollar. As you can see, the current bar right now is trying to move below that level, trying to break below that level. And if it does, the next target's going to be this level, which was the lows from last week at around the 165.60. And then we'll look for a test of the lower lows for this week at 165.34 area on the downside. So the progression that I'm seeing in this chart is more sellers up here, failure to move above that level, turns a tide, move below the 100-hour moving average, and these levels right here, and we're going to see the pound sterling move further to the downside. That's what I'm seeing from a technical perspective. What is your risk if we go above the 166 level? If it goes back above the 166 level, then all bets are off, but I'm looking for an extension outside of this range that has been containing the sterling versus US dollar. Now let's take a look at the euro versus US dollar, and we'll take a look at the same hourly chart. Looks similar, doesn't it? A period where the market's been consolidating in a little box down here. Now, in the case of the euro versus US dollar, we gapped lower from Friday's closing level as a result of increased tensions in Europe with Russia and Ukraine, and also comments late Friday from Mario Draghi that the ECB might look to add more stimulus, and that also has pressured the euro versus US dollar. Now, the pattern still remains the same for this pair, and that is that we have a area up here where the market has a number of different highs. We also have the gap from Friday. This is a low from Friday, and these are the highs for this week. Well, today, what did we do? We went above the 100-hour moving average and went up and tested that low from Friday. Went up right up to that level at the 132.19 level, found the sellers, moved back below the 100-bar moving average here, and we've been selling off since that time. Now, we came down to a support area, and that was derived from these lows right here. These lows, we had 1, 2, 3 lows, creating a trend line, moved below that trend line on Tuesday, and then again Wednesday, and then moved above that line and reestablished support against the old trend line. Oftentimes that does that from a technical perspective. When that support was reestablished, we start to move back up, tested our high, and then in the New York session today and the London session as well, the market started to come down, found support against the old trend line, and now we wait. We wait for either the break of this trend line, the break of the low for the week, and then we move lower, or we move back above the 100-hour moving average and go and test our high levels again around the 132, 14 to 19 level and look for further momentum to the upside. Right now, the bias is to the downside, being below the 100-hour moving average. The buyers had their chance to take the price higher earlier today. They couldn't do it, so put the sellers back in control. Look for the selling to take the price below the low and extend lower. Final currency pair I'll take a look at is the dollar versus yen. And the dollar versus yen is also consolidating, a bigger consolidation period, or so it seems from the chart. The one thing about this currency pair that I find interesting is that we did find great support down here against the green line, which is our 200-hour moving average, and we also found support against this bottom channel trend line here. We had a top side channel trend line, and we just put a bottom trend line in there, and the market, bang, found support against those levels and moved higher. This fuchsia purple line right here represents the closing level from yesterday, and we have been contained below that closing level. So not is all great in the dollar versus yen. We found resistance up above against the closing level, but we did find good support down below against the 200-hour moving average, and that's going to keep me a little bit more bullish on the dollar versus yen. Stay above the 200-hour moving average and look for a rotation higher, maybe test our highs for the week over the next 24 hours. If we fall back below that 200-hour moving average, all bets are off. The sellers are back in control. Look for lower levels. As far as economic data goes over the next 24 hours, we do have that may affect these currency pairs. German retail sales come out tomorrow at 2 a.m. And then probably the more important release will be the EU CPI flash estimate, which is expected to show a 0.3% year-on-year gain. The ECB targets a 2% year-on-year gain. Inflation is going the other way. This is what is spurring on talks from the ECB of more easing down the road. We also get EU unemployment, which is stuck at a lofty level of 11.5%, only down from 12% from the high. Compare that to the U.S. unemployment rate, which has come down from 10% to 6.2% currently. The EU unemployment rate has only come down from 12% to 11.5%. Very slow to make progress on unemployment. And later on at 8:30 in the morning, we have U.S. personal income and personal spending. That too will have an influence on the foreign exchange market. So there you have it. A look at from a technical perspective and maybe some trading clues for you that will make your trading easier in the foreign exchange market. If you want further information, you can always email me at Michalwoski at GregMikeFX.com or visit my website again on a daily basis at GregMikeFX. Good fortune with your trading. Bye-bye now.